Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today. We have the big news for today. We're looking forward to American Liberation Day. The market is preparing for Trump's tariff plans. So we will be discussing what those might be, what we know so far, what the significance could be. Stay tuned for that. We've got Circle filing for IPO as well, revealing it pays more than half of its revenue to Coinbase as distribution partner. Interesting details coming out there. We'll break that down too. On the NFT side, we've got Steady Teddy selling out on Berachain, 12 Bera mints, 9x up to 106 Bera floor price. Fun to see some NFTs popping off. So we'll touch on that towards the end of the show today. We've also got the latest on price action on crypto and NFTs, plus a general discussion on what we think is going on at the moment. I've got legendary Bread and Adam, product lead at Pirate Nation and Proof of Play, with us today. Cannot wait to get into it. We are ready. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very risky and we don't know anything for sure, no matter what we say or how intelligent we sound sometimes. With that out the way, legendary. It's Wednesday. It's the 2nd of April. How are you doing? How are you feeling?
MGM full house. I love the Wednesdays. I feel like
yes,
the pre-show discussion on the Wednesday is typically the three of us nerding about AI, and either you, B, or myself being aware of the fact that the show needs to start at some point. But we could probably go on for hours and hours and talk about our AI stack, which is the thing that Brett is very aggressively inquiring about. Like, Adam basically just arrived with us in StreamYard, and Brett goes like, Jim, what's your AI stack? He's been posting about it. He wants to know everyone's AI.
Fairness, he started it because he's spinning up applications like every second day, apparently. He's like, oh, by the way, which this is the power of it all, right? By the way, I've created 2 things since the last time we've talked.
How many have you created, Brett?
Yeah, that's how we have to start tracking our contributions to the world. How many AI applications have you spun up in the last 7 days? Oh, it's less than me.
Spamming my friends with this stuff. It's like, I made this. Like, when do you have time to do this? Like, it just does it for you. Also, I don't sleep very much. Those are the 2 answers to that question.
I mean, that's we're playing the game. Like, I did it too. Like, I like, thanks to actually Legendary, because he told me about that Bolt new AI, which does a lot of shit for you. So it's just literally just like, you know, someone vibe coded something on timeline, and I was like, okay, I'm gonna go query this thing and see if I can just spin up my own version. Boom, done in like 20 minutes. And everyone else, we're still in the phase that no one really understands that these tools are available. So everyone's like, oh, you're a wizard. What do you? Holy shit, you're so fast at this. Like, yeah, man, I can write some sentences. No big deal.
What do you think? So look, I wouldn't necessarily say any of us are. Well, maybe Brett and Adam definitely more on the coding side, but you know, we're typically busy with a bunch of other stuff too. If this stuff gets to us and is like, it can kind of captivating us in this particular way, something is clearly going on right now. We spoke about it a little bit last week, Adam. What's, like, for the audience who are maybe not in as deep as us, what's the key kind of takeaway? I know we spoke about it a little bit last week, but what are you feeling now with all of this AI stuff going on? What's the key thing you're feeling at the moment?
I wrote a tweet about this a couple of days ago, like working through my journey. I think the key takeaway for me is that the cost of an employee who is kind of just doing what they're told, and they're like given a spec, or they're creating a design, or they're coming up with ideas, I think the value of that type of employee is going to go down dramatically. And the type of employee who can just do all the things themselves, whether it's code, fake code, I should say, or vibe code, design, and ideate, is going to be much more powerful. And I think the types of employees who are going to thrive at companies are going to be more like go-getter, which has always been the case, but now you can collapse your team down pretty dramatically. Like, the fact that I can build anything that I want so far. Now, granted, when I show my CTO at the company, when I built, he's like, there's definitely some security holes here that I was like, without a doubt. Like, there's no guardrails. Like, my private key is in there. Like, there's something bad that I've done that I don't realize. So there need to be better guardrails around all these things. Like, I'm certainly making very junior dev mistakes, but I can take something from idea to testable in under an hour. That is a superpower, right? like even way less than an hour actually. And so I think the market is going to value creative individuals more than ever. It's going to value the idea more than ever. Execution will always matter, but the execution risk, I think, is going to be diminished on just like the building of the thing, whatever that thing may be. So I think creativity is going to be the thing that is going to be hard to mimic for now. Obviously, I think if we get to this AGI future, you know, it'll figure it out. But I think for now, like creatives are safe.
Interesting. Brett, did you want to come in there?
Yeah, I think maybe just like the kind of reiterating what Fern is talking about there, and then kind of what started this whole conversation for me, or what made me ask about the stack stuff, right? Like I talked about what I listened to the Empire podcast, you know, as Yano, head of Blockworks, right, talking about what he's seeing throughout his company, right? He's like, I have a bunch of employees, shit ton of creatives. Like 4.0 came out with ChatGPT's thing. That's what started the whole Ghibli wave. And he's like, him being obsessed with like even just image generation, like ads, like marketing, presentations, whatever, he quickly tell how much of a level up he can do and what this means to his and his staff. Less so about like, oh, I can now wipe out 30% of my people, and more about like my people can now 10x, right? Like they can go further, we can achieve more, we can do whatever. And then that branched into the stigma that is associated to using these tools today still, where he's like, I can see clearly that like a portion of my employees are like hesitant to use this because they think it cheapens their work. They think it, you know, removes some of their utility. Like, you know, there's still some hesitation there. And he's like, the other 30% or X amount are like clearly leveling up. Like they're going crazy. And he's like, I want those people. He's like, and like, so whenever I get stuff that comes to me from the people that are still afraid to use some of this shit, he's like, I'll just straight up tell them like, run this through ChatGPT, like go AI this for a little bit and then come back. And you can actually draw parallels to that from there's I forget who he referenced that said it, but like the manager's tactic was always like, whenever someone comes and brings them their things, like, is this your best work? Is this your best work? And then they'd often go like, okay, I'll be back. And then they'll run off and then come back. And after like the third or fourth time, they're like, okay, yeah, this is my best work. And now instead of like explicitly saying that, you're like, did you run this through AI yet? Do that first and then come back to me.
Yep. We're going to start experimenting with cold outreach for our VRF products and for our B2B products. So we've historically just been, you know, our industry contacts, which are very deep, but we're like, we want to experiment. And so I've never done cold outreach emails before. When I was in college, I actually did cold calls I was like selling venture debt. And so I did that for 2 summers, and I like call people. I was like, hey, like you're a Sequoia-backed company. Do you need any venture debt? So I have a lot of experience with like cold calling and just being told no. But we're doing cold emails, and I hadn't really ever experimented that. So I had ChatGPT write up like best practices and I fed it like a white paper that for Pirate Nation, like everything you could possibly know about us. And it like gave me like the best possible emails. Like, here are 3 variants that are going to kill, and here's why. Like they're optimized, like they're using the best practices from these companies. So I'm going to start testing them, and then I'll feed the results back, and you know, we'll just get that loop going. So I don't just make stupid pizza apps. I also use it for work.
I'm sure you're going to use those cold emails for something pizza related at some point, Adam. So
I gotta stay on brand, you know.
I know. Funky, your hand is raised. Welcome to the stage, my man. Give us a quick take here on the AI stuff before we get into the headlines and price action, get everyone up to speed.
No, I'm so glad you guys brought this up. As the former educator of 20 years in my side work doing the art and blockchain education stuff, I often get into conversations about AI, and every educator thinks about this the wrong way. And what you guys are discussing is a shift in mindset and reframing this. And I said it to them all the time. For one, it's a learning engine. If a kid goes and approaches AI and they're remotely autodidactic, they're going to ask it questions and they're just going to spin that flywheel. And to Adam's point about creative people, and I said this to many other people, we need to be giving kids these tools and teaching them how to prompt, because it's going to give them a competitive edge in the world. The people who are going to succeed in the economy are those, exactly like Adam said, who are creative. And this gets back to something Jack Ma said like a decade ago. He said we need to stop focusing on the knowledge economy, because anything a machine can do, machines are going to do better than humans. We need to focus on what makes us human, and that's creativity, and that's emotions, that's learning how to play, how to be social, taking all those things and using AI to ramp up that productivity. Absolute game changer. Love the conversation.
One quick note before we get into the price action on that, because you like that funky. I talked to a law professor at King's College in London who is focusing on AI, on ethics, on blockchain, and the way he approaches stuff is to integrate AI to make the PhD students like think about the limits and the capacity of what AI can and cannot do. Is he takes a specific case, he has an essay written by an AI, and each student gets an individual essay by the AI, by ChatGPT 4.5 in this case, and they are tasked to like review that, to find the flaws, to find what's good, what's not good about it, to like basically approach it from the other way around, to like actively take something I written and try to find and puncture holes in it and understand how the LLM works. And by doing that, integrating like AI in a way more meaningful way than being like, oh, we're just going to ban everything that's submitted by OpenAI or any other LLM.
Very, very interesting stuff. So the people who are going to be successful are going to be those who are most creative. Imagine what they're going to be like when they're liberated too. We're going to be talking about American Liberation Day in just a little bit. Before we get there, let's get into the price action. As usual, starting with the majors, we've got Bitcoin up 1% at 84K. We've got ETH flat at 1.8. XRP down just 1% at 2.1. BNB down 1% as well, 600. Sol down 1% to 126. Not a lot going on the majors. I think everyone is just waiting for the information we're going to get later. It's 4 p.m. Eastern time, the announcements around Liberation Day later. Getting into the meme coin side of things, though, we've got Doge pretty much flat as well at 17 cents. Pepe's down a couple of percent. Trump is up 1%. Bonk's up 3%. Fartcoin's up just 2%. SPX down 5%. Pengu's down a couple. Usually I can see down single figures on the meme coin side. To be honest, I think, as you said, most people are waiting today for the deeper news we're going to get later. Getting into the headlines themselves, crypto is flat ahead of American Liberation Day. Market prepares for Trump's tariff plans. We'll be breaking down those at the moment and what information we know so far and what the implications might be. We've got Circle filing for an IPO, revealing it pays more than half of its revenue to Coinbase as distribution partner. Legendary will breaking down some of the interesting details there. And then finally on the NFT side, we've got Steady Teddy selling out on Berachain. A nice 9x for minters. Nice to see people win and NFT projects letting the community win. I'm looking forward to see. Maybe we'll have a scroll of the art towards the end of the show there. Pretty interesting stuff. Some notable price action. The Guns gaming token we spoke about yesterday has dropped another 21% after criticism for changing investor terms. I don't think it's necessarily because of the criticism. It's just the type of the market and the sell pressure at the moment. Not enough demand, I guess. That came out at 1 billion FDV, now down to 580. Also, you had Jupiter down another 7%, down almost 50% on the month after announcing buybacks. It's down 30% on the week. A lot of tokens might be down in similar regions, but I picked that one out in particular because there's so much hype around them buying their token back, and everyone was talking about how it's so bullish to be buying your token back. That's what they announced, but this kind of market is not saving protocols that are doing that necessarily. So I just wanted to point that out. And Legendary, is there anything we need to know on the NFT side of things? Some huge CryptoPunk sales here.
Absolutely, yeah. The CryptoPunk sales are definitely the most interesting thing that happened yesterday, apart from the Bear Mint, which we'll touch on either way. We've seen a bit of a pink wave, all pink CryptoPunk, pink hair, other pink trades selling for 100 ETH. And we've also seen the two pilot helmets selling for a total of 200 something ETH combined. Apart from that, pretty quiet on the NFT side of things. As you said, ETH is very flat. Everyone and everything is waiting for Liberation Day, but Punk's not only doing well in terms of the major sales that we just pointed out, also the floor price is holding up extremely strong at 42.6 ETH, and at the current ETH price, that is an 80K floor.
Okay, good stuff. As you said, we're getting into the Liberation Day tariff conversation a little bit later, along with the Circle IPO. I think those are two biggest headlines. We've got some interesting conversations to have before that, though. Just in some other news that I think is important to note, Tether announced 8,888 Bitcoin buy in Q1, bringing its total holdings to $7.8 billion worth of Bitcoin. That's the sixth largest amount in a single wallet. You've got GameStop raising 1.5 billion in convertible notes to buy Bitcoin. VanEck registered a BNB ETF, joining its ETFs for Bitcoin, ETH, Sol, and AVAX. BlackRock has been approved in the UK to operate as a crypto asset firm and offer its iShares Bitcoin ETP. A couple of other things from around the space. Shape announced the Shape claim for artists who deployed a contract on Ethereum L1 via Manifold. So if you're an artist, that's kind of interesting to note. Shape, remember, is this kind of art-focused L2. We worked with them some time ago, kind of doing some really cool artist interviews. They've got some of the top artists on their platform. And finally, fund contributors to put the dog without on the Las Vegas Sphere will be refunded. People were asking where those funds went for quite a long period of time. Apparently going to get the funds back. I don't know what people prefer, getting the funds back, or would they have rather the funds to see the dog with the hat on the Sphere? But that is the situation. So that's the roundup to get you up to speed with everything that is taking place. Before we get into the main stuff, I might actually just direct the conversation a little bit here, because actually, no. Legendary, is there anything you want to pick out there before we get into a couple of things I want to talk about?
Yeah, real quick on the BTC buying by companies. That is becoming a stronger and stronger trend. And I do like to occasionally revisit Bitcoin treasuries as a website to just keep a bit of a broader look on how that is evolving. So the last 30 days, we've seen another 5 entities adding BTC to their balance sheets. That obviously this website is aware of. That's 173 companies now, roughly half of them, 89, being publicly traded ones. And the total amount of BTC in treasuries is now up to 3.15 million BTC. And that figure doesn't sound a lot, but in my opinion, it is a lot, is up 0.7% over the last 30 days. So 1% is 30,000 Bitcoin. That's like 20. Yeah, it's like 20,000 Bitcoin that have been added over the last month to company treasuries, which is pretty significant.
Interesting. What do you make of, just a quick one here, what do you make of the criticism of the company buying, which is that they're not significant enough companies to influence anyone else? Like, they're kind of fringe companies potentially. They're not necessarily the prestigious companies. Is this something which has to happen for anyone to take notice? Is it supposed to be the big companies? Adam, do you have a view on that? That's like, I guess, the one criticism that exists there. Or does this have to take place first before the other people follow? They have to follow their own processes.
You always have to have the early adopters. And so I guess if it's going to be strategy and GameStop as the first couple Block, where I used to work, also jumped in the ring a while ago. They were like a pretty early buyer, and Tesla also. I think that you'll see more companies start doing this over time. Right now, it feels still on the fringe, but I wouldn't be surprised if you see more mainstream companies, maybe some large financial institutions, start doing this as well. And as far as what needs to, like, for the dam to break, I think you need more like legitimate name companies to do it. Like when El Salvador started buying Bitcoin, everyone's like kind of making fun of El Salvador a little bit. But when the US started buying Bitcoin, or at least not selling Bitcoin, I should say, that's a very different signal, right?
For sure. Either way, the Tether business model is just absolutely outstanding, but we'll have some interesting data to contrast that with a little bit later. Legendary will be sharing the Coinbase IPO information where they revealed some of their costs. And I think it's quite stark that they are not running, well, they might be, their business model is not operating as efficiently, accumulating wealth as Tether's is. So we'll dive into that in just a little bit. The thing I wanted to get to first was just a quick point on price action. I put this tweet out earlier today where I just said, like, the market is so ruthless at the moment. So like thinking about price action, I was looking at Jupiter. I don't know how I found myself on Jupiter's token, but Jupiter's down almost 50% in the month. It's down 30% on the week. And I just thought, like, it must have been no more than 30 days ago, maybe even less, where everyone was talking about hype and buybacks. Everyone was talking about revenue generating protocols. The only way to have anything valuable is if you're making money. And potentially on top of that, you have to be buying your token back in order to justify your valuation, to create demand. But it seems like that's not necessarily the case. Like, And I said here, just when you think you figured something out, people really prioritize revenue generating protocols. People are really prioritizing buybacks. Jupiter's down 50%, Hype's down 30%. And the interesting, maybe cognitive dissonance I noticed is when I posted that, I think a lot of people jumped to the idea that this is because of their connection with Kelsia and connection with Meteora and the whole Libra scandal. And I don't know if we've necessarily heard the end of that. But you know, that connection maybe is tainted Jupiter in some way. That was the suggestion. It's like if you just look at the rest of the market, I think everything is down pretty colossally. So I think we do this thing quite a lot where we, after the fact and after the price action, we just take some events and then attribute it directly to some events, when actually in this market, I'm still pretty clear in my mind, we're entirely trading along the president's tweets and and takes. Whatever he says today, again, we will move in step with that. I think it's very hard to break out of that in the kind of short term. Curious to hear your guys' takes on that. Do you have any thoughts on this kind of short to medium term action and the just general environment we find ourselves in at the moment?
I think it's just so indicative of the narrative follows price stuff. Right? We got excited about something, and because we were excited about it, and because price looked good for a minute, and maybe it was a fresh narrative, maybe not even a new narrative, but a fresh narrative. Like it was just didn't have a couple of weeks / months of conversation around it. We were able to bull ourselves up on it, and then ultimately people seeking money sought money elsewhere because they wanted a new narrative. And that's just how a lot of this stuff works.
Market is ruthless. It's absolutely ruthless. As a company, that has a live token, I can tell you it has not been the most fun and entertaining time to have like a token in the market. Bread guy, Godspeed. When your time comes, the market's just like not very forgiving right now, and I don't even know if you're doing all the things the market wants, whatever the market may be. I don't think you can overcome the macro. I don't think you can overcome the bearishness of just CT in general and like the trader mindset.
Well, I think that was exactly my point. So I think people were trying to attribute maybe Jupiter's price action to some things that are actually more concrete. But you look at the other stuff, and everything's been hit, if not as hard, like just as hard potentially. Someone pointed out to me, for example, and this kind of, I don't know, this just missed my radar. I'm just going to share my screen quickly. The first time, I think, Kaito, which people are super bullish on, people think it's a great product, people like it. It's now beneath the price that it came out at. It came out at $1 billion FDV. So those early sellers, Bread, who felt terrible for a period of time because they saw the airdrop double in price or triple in price almost. I mean, this went up to almost 270. And now it's back down to, well, it is for now, down to 92 cents. It's down 10% on the day, down 30% on the week, and 50% on the 30 days. So those metrics track exactly Jupiter's, basically, is my point. And it's got nothing to do with the issues that Jupiter has been facing. This is just the market being the market at the moment.
My lazy ass is vindicated. That's all I'm just going to say here is like, there's no way I was going to track this price action. I had already forgotten about it. It's like, all right, position's established. I'll just kind of let it ride. I'm writing, I don't know how much. It was like 30% of my stuff to zero. It would appear. So here we go.
No, you're not. It's not that bad. But like when people in our community are like, you should do more things to make the price go up, which we don't do as a company. I actually don't know what we could do. Like, yeah, could like we line up a shady market maker, just like market by $1 million? Okay, sure, we can commit market manipulation, but leaving that aside, they're just the meta now is down, and maybe the meta will be up at some point in time. But right now, everything just wants to go down, and there's nothing you could do. You just have to like embrace, accept, continue on. If you're building something, like create value. Like Hype is still doing $1 million of buybacks. They're still doing tons of revenue, not impacting the token price in any way. there's not that many protocols that are doing million or millions of dollars of revenue a day. Doesn't exist. It doesn't. So my point is, like, I don't think it matters what you do, what narrative you fit into. Guns was supposed to save Web3 gaming, but if you give 80% of the circulating supply to Binance, what do you think is going to happen? What do you think these Binance stakers are going to do? You think they're going to hold it? Of course,
it's free money for them.
Yeah, they're going to sell
free
it.
money.
And what happens when you sell 80% of circulating supply that is tightly controlled? You get a chart like what you see.
Yeah. Difficult situation. Talking about what else you can do. Kaito founder even bought, what was it, $1.4 million of his own token, Adam. So that there's always that option. You're gonna.
Yeah, and then what happened? It still went down.
Yeah, exactly.
So they just wasted $1.4 million that they could have used on product development or hiring or growth marketing.
It was his private money in his defense, though. It wasn't company funds. It was his own money.
Even worse. He could have been $1.4 million richer.
Yeah, I think the main thing is, like, independent from the market, that for most of the tokens, you just don't need to hold them. Like, they don't really do anything, and you speculate on the future utility. Take a token like Kaito, cool product. They will build future utility, but right now you don't need the Kaito token. Yes, you build up a nicer score on your profile and you can vote with that. But if the market's down and the token doesn't have any like immediate use case where, like, I want to hold this token because it gives me access to something I really, really want to have, then you're going to sell it off. And even if that's the case, which used to be the case for AI XPT with the terminal, the market goes down and the hype is leaving, and people at one point were holding $600,000 or $300,000 worth of, no, 600K almost, because it was almost at a bill, like $600K dollars worth of AI XPT token to have access to the terminal. At one point, like, you will have to ask yourself the question: is this tool really that great that I'm having like $500,000 deployed in accessing it? So even if you have a token that has this immediate utility, if it goes up and up and up, at one point the worth of your token will outweigh the utility that it gives to you, and you will again have the incentive to sell it. So it's very hard to keep that up sustainably, and especially in market conditions like these.
I'll say one thing. Despite the Web3 gaming narrative is dead, I do believe that there is a use for gaming tokens, like with a strong utility case. However, it requires a large number of DAU. If you have a large number of DAU and you use that as a way to like purchase items in game, like speaking of Pirate Nation or any other companies that do this, I do think it can work. If you have like constant buy pressure, but it requires enough people to want to play your game, and it requires enough people to want to purchase the things that are in your game. And if you remove all the friction from token purchasing, I think it actually is an interesting model. But since Axie, I don't think we've seen a game that's had like a breakout number of like DAU where you can meaningfully move the metrics. Like Pixels had 1 million DAU at one point, maybe they still do. But those are the only two games that have really broken 7-figure DAU.
I think this is like one of the massive challenges is people are completely underestimating. So like if you look at the traditional economy of a country, right, you want to hit like your 2% inflation. Deflation is bad because otherwise companies, investors won't invest. They will just wait for a point where it's just worth investing again because there is no deflation happening. And you want to have like this 2%, but then you have a game where you have like millions and millions of users. Say you really have this MMORPG where everyone wants to live in. You also don't want the underlying currency to be like hyperinflationary in a sense that either everything gets devalued or the opposite of that, nobody can afford anything because based in dollar terms, it's so expensive to buy the token to do that. And then you need to fine tune the tokenomics and the pricing to solve for that, that you on the one hand have people who want to see the price go up, but on the other hand, you want to have a like sustainable in-game economy that works for people without playing a game and needing to pay, I don't know, $10,000 for your first pickaxe to even be able to wander off to the first mine and start working. And it's already so hard to do like economy and inflation models for real countries, and then building that on top of a fun game and having the challenge that you have those two competing interests of keep a healthy economy, people want to see price go up. I think a lot of people are underestimating how difficult that is to solve for.
The like quote unquote right way to do this is you constantly balance the price and you fix it to like USD or whatever native currency you're trying to fix towards. because you're right, you can't have like a $9,000 pickaxe in a game, right? It has to be whatever the price point you want it to be.
If it's golden.
That is true. So yeah, you have to constantly moving prices around to adjust for the token price if you do go that route.
Yeah, complicated things to balance. But as we said, my point initially when bringing this up is just like, this is a market-wide thing going on at the moment, and a lot of teams are just having to process that and figure out the best way forward. It's not specifically one person or team that's affected. It's kind of going market-wide. So that's just why I wanted to bring that up. I wanted to bring up one other thing before we hit the Liberation Day stuff. Funky, if you're available now, I know you shared the crypto Arthur Hayes article that just came out. Do you want to give us a quick TLDR of what we need to know from his perspective? I think something from what I saw is that he's predicting things to turn around pretty nicely towards the end of the year. But do you want to just give us that TLDR on why that might be the case?
Yeah, sure. And, obviously I love reading Crypto Hayes and sharing his articles when they come out as essays. And I want to kind of apologize to the man, because I remember talking smack when he was saying that the election was going to be a sell the news event, and maybe the knock-on effects took a little bit longer and they didn't probably go as low, because I think he predicted a $70,000 Bitcoin. But obviously he was right? So that was the first thing I want to start off with. The TLDR on this one, which is called the BBC. And I will say, I think Hayes is at his best when he writes some really hilarious satire, and that's what this one opens up with, where it's Powell going to see sort of like a therapist and explaining and complaining about dissent and what's happening, and that's what the BBC is. And I'll let you read to find out what BBC stands for as an initialism. But either which way, the TLDR is effectively that and what's really interesting is you go and look at sort of the past, where he brings up this analogy of what happened between I think the guy was Arthur Bush, and then it became like Paul Volcker after that. And we're facing the same thing that we faced in the 60s, which is effectively the Treasury is forcing the Fed to make its move. And that the Fed is not nearly as independent as we like to think it is. It does get involved and mired in politics. And effectively, Jerome Powell is at a place where he has to do something to eliminate the quantitative tightening. And of course, there's going to be a lot of financial chicanery that's going to do this. And a lot of that's alluded to in the satire. But the net effect is what we've been talking about for a long time. Trump is effectively forcing the economy, trying to run it into the ground so that way we can redo the rates and get more debt at a cheaper price, effectively. So we're already starting to see that come down. There's a couple interesting charts, because as long as we can continue to keep the growth above what the interest rate is, we're staving off sort of that debt implosion, and it's going to take longer. It's not like we're going to completely eliminate it, but the net effect is that ultimately we should see up and to the right resume before the end of the year. You already see this now. If you guys are paying attention to global liquidity, and that has sort of a lag in terms of how long it affects risk on assets. Global liquidity is up. If all these things play out as Hayes predicts, and it seems like there's really Powell is in a corner. And as long as he does these things, we're going to resume up and to the right. And especially because China is going to then have to devalue the yuan to keep up with what's happening in the US. And there's just all of these dominoes will start to fall. So ultimately, he's predicting upwards of $250,000 per Bitcoin by the end of the year. Maelstrom, his fund, is already positioning and has been buying in small clips, anywhere between, the 70s where it kind of bottomed out and up to 90K. He thinks the level that we're on right now at about 85 is going to be interesting. If you look at quarterly closes, this was actually very bullish, even though we're looking at, again, crypto Twitter is so short-term mindset. They just always focus on the next few weeks or few months. And yes, we're down below, say, the 30, 50, 100-day moving averages. But when you look at the quarterly close and everything else, it's a very bullish setup. I mean, heck, even English, he was Mr. Bearish in the Modern Market Discord, and now, of course, Mr. Perma Bull. And he's even saying it's starting to look better, right? So I think that now we're starting to see this turnaround. I really think it's just a matter of waiting it out. Of course, we're probably going to have to go through that summer lull, right? But I think this next quarter will be indicative of what's going to happen. And some of these things starting to play out where the Treasury will have to effectively get rid of some of the liquidity. It's going to loosen up the conditions. I mean, the Fed rather. And, the debt ceiling, how that stuff plays out. He does give a warning, however. The last thing I'll say is this, is that, of course, you could have some giant macroeconomic bad thing happen, like a black swan, right? That maybe there's a war that breaks out or whatever that may be that could knock all this off course. But it's looking very good. Highly recommend reading the essay. It was a really funny one. I laughed a lot.
Amazing summary, Funky. Really appreciate your additional context there. That's so helpful for getting just a bit of an additional take on where things might be going. I guess the only thing that I would push back on, because I've seen various people push back on this idea that it's all so intentional and that everything is happening because they're driving the economy down on purpose. The thing that I've seen some pretty smart people say in contrast to that is something along the lines of like, no American president has the mandate to wreck the economy. And I mean, maybe this in some way does still feed into what you're saying, is because if you were to attempt it, then you would need to correct yourself pretty fast, because it's not a path that you have a mandate for very long. Like, even if people might be pro cuts, pro ending certain wars, pro doing various things, if it's going to tank the economy at the same time, the argument is that you do not have the mandate for that. So that's the only thing I'd say. We've got to keep it moving, because I think this next headline probably feeds into what you were discussing. Like, well, this is all kind of pending macro stuff. And obviously one of the biggest macro events is taking place later today. This is the news of Liberation Day. Today is Liberation Day. It's April the 2nd, 2025, the day the markets have been waiting for because of Trump's aggressive rhetoric around tariffs. This is important because ever since Trump started to posture that tariffs would be on the cards, alongside his domestic policy trying to cut government waste and the ongoing uncertainty with the war in Ukraine, markets have given up almost all their gains, which kicked off in full swing after Trump's election victory. And so this is the thinking. It's called Liberation Day because this administration believes it's time to liberate itself from what they describe as unfair trade practices, like high tariffs on US exports and reliance on foreign goods imposed by other nations, which have been undermining American economic power. And the thinking is that by imposing reciprocal tariffs, because the point is that these tariffs already exist against the United States, so why should they not also be reciprocated? And so by doing that and some other trade measures, Trump claims the US will reclaim its financial sovereignty and restore prosperity to American workers and industries, which have suffered whilst other workers and industries have prospered. So that is the argument. Many have taken the other side of this. Many have suggested that tariffs may raise business costs, slow US growth, and pressure equities, which is a lot of what we're experiencing already as the markets are anticipating some of these things coming to fruition. The key detail, which you should know, which was released yesterday by Treasury Secretary Scott Bessent, was this. He said that they said that Trump will announce a maximum tariff ceiling today, offering countries a chance to negotiate reductions. So, you know, the argument is that this flexibility could temper market shocks. But ultimately, the uncertainty continues there, right? Because markets like certainty, but we're not necessarily going to get it if people can negotiate, and that kicks off a whole round of negotiation. So that's probably what my view is. It sounds like there will be a maximum tariff rate. However, you know, maybe that quells some of the fears, because it means that look, this is not going to be as bad as you think. There's going to be an opportunity for people to negotiate. However, that does not provide the market with the certainty it likes, because there is this optionality for everyone to negotiate it down. And as such, I don't think this is going to be the definitive day everyone thinks it's going to be. I think we'll have some reaction, but we'll continue to chop once we realize there is no definitive answer. But ultimately, it just depends on the details that will be shared at the end of the day today at 4 p.m. Eastern time. So look forward to seeing what they say and reporting on it tomorrow as usual. So that is my summary and take. Legendary, coming to you first. What are your thoughts? And then Brad, I want to bring you in.
Well, Trump is excited about it. Posted on Truth Social 30 minutes ago in caps lock. It's Liberation Day in America. I think we talked about the tariff stuff for quite a while on the show, and basically we've been going back and forth between either the stance that the market has priced things in because now we got used to tariffs, and then saying no, he's escalating that to a whole nother level, which the market had not priced in just yet. So this is why we're reacting again. And I feel like this game is going to continue for a while, and we'll just have to wait and see what happens today. As you said, it's a president's market. We have to wait for the post, for the announcement, for the video conference, whatever the chosen format is, and then see what we'll make of it and what the market will make of it.
Brad, what did you think of, A, it sounded like you wanted to react anyway, so what are your thoughts? And then B, what do you think of my take where it's like, look, everyone thinks this is going to be the day you get the answer. I don't think it is. If you just have another round of negotiations open with every single country, that's not definitive in any way. What are your thoughts?
I'm actually going to flip that and answer the second thing first, because my reaction is separate. I actually agree with you. And I think you don't have to look any further than seeing news from 6 hours ago where they're like, we're kind of still figuring out what we're going to do with this thing. And so the fact that it's fluid, I think, is an understatement. And I would agree with you largely.
Do you think it's fluid, not because they want people to be able to negotiate? It's just like, we don't actually know where we're going.
At the moment. They're vibe presidenting. That's what they're doing. They're vibe governing. So
that's a great shout.
So I mean, it's just what we're in. It's the paradigm we have for right now. But the original reason I was want to do something is on the Arthur Hayes stuff, using AI ran it through a sentiment analysis of his past 18 months to say, hey, review all of his predictions and his forecasts and weight his predictive skills. Tell me if you think it's accurate on broad macro stuff, whether it's the NASDAQ or just BTC. Tell me how accurate it is and tell me if you would trust him going forward. And based on reviewing all of the Substack posts from the last 18 months, it said short term, his actual predictive skills is around 25% accurate. So would it trust him? But it's a mixed bag. He's good at very high time frame, global liquidity stuff. He seems to have been accurate on that stuff. But as far as predictive skills goes, it's not satisfying our AI overlords.
Okay.
Happy Liberation Day to my fellow American, Brad.
You can be more happy about it.
Celebrating today. Yeah, I think this is one of those monkeys and darts situation. 50% of the people are going to be right, 50% are going to be wrong. I have no idea what's going to happen. I hope nothing happens, to be honest. That would be the best case outcome, because I think more likely bad than good. But also, I don't know. And I think that I don't really understand the people who speak with so much confidence about they're wrong most of the time. Most of the people are wrong most of the time. So I'm just gonna wait. I'm gonna celebrate Liberation Day with my fellow American Brad, and we'll see what happens. Maybe we'll look back on this conversation and this is the start of something great, but probably not. But maybe also yes, because who can know? The markets are schizo.
Definitely that. To your point, I think this is one of the biggest times in my time here. I've been around forever, since 2020, 2021, where the most knowledgeable market participants have just said, guys, I don't know. No one knows what's going on at the moment, because you're trying to predict what other people are thinking and what other people think the policy should be, and we just don't know what they're going to do. But talking about having certainty and people not knowing, this is what I think is part of it. I think that what we've been seeing in a way is people pricing in the worst case scenario over and over and over again. And increasingly now I think we've got to a point where something comes out and, I think we're kind of getting to the point where okay, well, that's kind of been priced in. We've considered that. And if the answer is entertaining this idea, Adam, that is anything going to happen? You're going to name some maximum price, then you're going to go off and negotiate. It's going to take some time. Are people just going to get bored of these details? And they're very, very important details. But my point is, I think we're getting to the point where the pricing of the assets are kind of not reacting to the downside anymore as much. So that's where I think we're going. Interesting stuff. Look, I think we've got one other really, really important one to get into, and maybe this is all tied in with each other in some way. But we were talking about Tether with the big Bitcoin buys earlier. Legendary. Some interesting information came out about Circle filing for IPO in the last 24 hours. What do we need to know here? Why is this so interesting?
Yeah, absolutely. Circle, the company behind the stablecoin USDC, just filed for its IPO. And there's two surprising pieces of news tucked inside. According to the filing, Circle revealed it's paying Coinbase more than half of its revenue just for distributing USDC. That's more than 50% of the revenue that's being paid to Coinbase. And that kind of is very emblematic to show how crucial Coinbase is to Circle's entire business model. And just to understand the second piece of news or second surprise, a quick explainer on the Center Consortium. So basically, that's the joint venture that has been created by Circle and Coinbase to issue USDC. Again, every USDC token is backed by $1. And the surprise here is that Circle quietly bought Coinbase's entire 50% stake in Center Consortium back in August 2023 for $210 million in stock, a deal that was hidden until the IPO filing this week. We did know that a deal went on, and we did know that the purchase happened, but the details and the sum were not known yet. Takeaway here is that Circle now fully controls the Center Consortium, basically makes the operations easier ahead of going public. It's also easier to understand for the lawmakers what is going on with the company that is to be IPO'd. But again, it also very much highlights how much Circle remains dependent on Coinbase, given the fact that more than half of the revenue is being paid to Coinbase in order to distribute the Circle stablecoin, in order to distribute USDC. There's been a couple of interesting commentary on that on the timeline. The most notable one, just to get some understanding on the figures, that's $1.7 billion in revenue, 900 mil plus being paid to Coinbase in 2024. And a very interesting take by Wyatt Lonergan, who is the GP at Vanek Ventures, talking about partner costs and saying that this is the biggest line item to pay attention to. And that kind of makes it very, very hard for investors, for participants in the market to even say what type of company Circle is and how are we treating them. Are we treating them like a bank? Do we price them like Visa, a network-based business with massive distribution that only takes a small rate? And then the other big elephant in the room, as you said, B, is Tether, offshore, unregulated, 50-ish employees just printing cash. There's no Coinbase pushing Tether. They are just doing all of that by themselves, and they're clearly the market leader here. And that is a very tricky question to answer for the market. Another aspect that Wyatt is pointing out is the stablecoin bill and how that, we talked about it. We talked about the first drafts that we've seen, but how that eventually will shape out and look like exactly. Concludes by saying that two things or three things are clear. A, that sharing yield with B2B partners is here to stay. B, that margin for issuers will decrease as the overall stablecoin pie grows. And C, issuers will need to diversify revenue lines outside of just capturing the net interest margin.
Very interesting stuff. Adam, I know you come from a payments background as well. What's your take here on this news? We spoke a long time ago about this relationship between Coinbase and Circle, which I think everyone knew existed, but it wasn't necessarily so obvious how important Coinbase was to its distribution. What are your thoughts here on their IPO and they're going in that direction, and this relationship with Coinbase and their dependence on Coinbase?
Fun facts for me. In 2014, I actually consulted with Circle Financial Group when they were an app that was all you can do was buy Bitcoin with credit card, and they were getting hosed with risk and fraud. And so I was running risk and fraud at Square at the time for my teams, and they're like, "Hey, we need help." And so I used to moonlight over there and help them, and they were just a total mess. 50 or 60% of transactions were fraudulent. Bitcoin was about $100 or $200 at the time, maybe 300. And I was like, this is crazy. These guys are just losing so much money on credit card fraud. And then they evolved from there. They even I think they the sign up bonus when you join Circle was the equivalent of $5,000 in Bitcoin now. Because it's but anyway, that was a simpler time. Listen, they're definitely not Tether, that's for sure. Giving up 50% of your revenue, not great. And they don't seem to be growing at the same rate as Tether. If you look at the on-chain flows, what's being minted at a higher rate. So if they're going to be measured against Tether, I doubt Tether would go public. I don't see why they would. They're just minting cash for the team. Going public is just a nuisance, or it's a liquidity event. But if you don't need that liquidity, they're going to always be measured against them, even though they're not going to be public market companions, and they're going to have a lower, like they're just worse across basically every metric. I don't know why or how they set themselves up differently. I mean, I don't know what the strategic differences were in the founding days, but they made a misstep along the way that made them less profitable than they could have been or they should have been, giving up like so much to Coinbase.
I think so another thing that caught me is interesting whenever looking at the IPO papers was how much they're actually paying out in terms of salary. Like I think they saw that the actual cost to staff was like 250 million a year, which is crazy relative to like Tether. And Tether has like 90 employees or something crazy, which even if you have ridiculous salaries on those people, you're still a fraction of that, right? And I wonder if part of that is just the regulatory environment that Circle has tried to deploy itself in, right? Obviously, it's like Coinbase. Coinbase is being murked by the Binances of the world because it's trying to operate within the U.S., which has been notoriously a pain in the ass to operate in as a crypto company. I imagine it's been somewhat similar for Circle, right? Like having to pay a shit ton in lobbying, paying a shit ton in like basically anything to try to survive as a business around here. But that number stood out to me pretty starkly.
Yeah, I think they've got significantly higher costs around the world. I saw an interesting conversation about their compliance in the EU, for example, where I think Tether has basically been ousted and basically are not able to operate, whereas USDC have obviously spent the time and money and effort to become compliant. And, that's going to come with a whole bunch of costs, especially with the kind of regulatory outlook and frameworks in the EU. How they really like pushing that stuff pretty hard.
And now they're losing some of the regulatory moat that they obtained in America, right? With these two acts coming out, right? Now you have like, we're talking about states coming up with their own stable coin, right? So like, yes, you'll probably have something on the back end that rolls that up into a USDC potentially, hopefully, maybe for them is what they're saying. But like if there is guidance for every Tom, Dick, and Harry inside of America to have their own stable coin, people are going to do it because the incentive's there, and that removes some of their usefulness.
And look, and I always say this about Tether. People can say whatever they want about Tether, but as far as I know, it does get audited. I don't know if it's by Big Four, but like they do release all the stuff. Like I've looked at the documents myself. And the other thing people need to realize, again, people can have whatever perception they want. Paolo was invited to the White House the other day. Like, and this is like part of my investment thesis sometimes. Like I just go off photos that I see sometimes. I watch who is sitting where, who is photographed with who. Like it's literally important. Like people can say whatever they want. Where was the Circle CEO on that day? Maybe he was there as well. Brian Armstrong was obviously there. But the point is Paolo was in the mix. So these guys are in the mix. And to your point about there being some kind of regulatory moat in the US, is that going to be there forever? Like it sounds like they're just as much in the mix. So
counterpoint, I bought a bunch of coins in 2017 that had a lot of people sitting next to a lot of people, and all that went to zero. So I want you to put that in your memory bank.
Well, my NFTs that had one person sitting next to 4 people is doing quite well. So just maybe this photo investing thesis, Brad. We'll talk about it. You got to.
The steady teddies were in the White House the other day.
Yeah, the steady teddies in the White House. Brad, give us some light relief. We've had a bit of an important show here today. Give us the quick 1 minute TLDR. We're drawing towards the conclusion, but we can't ignore some of the fun stuff going on Berachain. Their yields are going crazy, and we need to figure out what's going on there because the DeFi stuff is pretty cool. It's being very profitable for people, but steady teddies also minted yesterday. What do we need to know?
There are still opportunities in the market. So Steady Teddies, which is an NFT project that was launched on Berachain being the proof of liquidity L1 that just dropped. They just sold out. So there was 8,888 NFTs sold out for 12 Bera per, which is about roughly $80. And then now they're sitting at roughly $700 or 100 Bera. So that's a good clean 9x, as you pointed out. The interesting notes here are that 1, yes, they sold out in this market, which is good and exciting for people. And 2, they have some unique stuff, right? The pre-reveal art is actually a bunch of memes. So people are having some entertainment just by scrolling through the pre-reveals, which is just, again, 8,888 memes from 50,000 meme submissions that the artist curated. So there are green shoots in the market. Keep your eyes out.
Love it. I think, go on, Adam, did you want to come in or Legendary?
I just have to say, I'm just like scared of Berachain. I hope that no one comes after me for this. Like, I mean, and no one any harm. I don't mean to FUD, but my understanding is that they have their roots in like the Ohm folk. And I don't know, that's not a great.
Ohm has come back. Ohm has come back. They're using that a massive treasury that they earned back in the day, and they're using it to like do some buybacks and some distributions and stuff. So the coin's actually doing okay this cycle. But yes, there's some history there.
I am just concerned when I see yields at these rates. I know you can make money. Of course you can make money. However, I've also been burned by these things in the past. I kind of know how they go. Maybe this time is different. Maybe I'm wrong, but I'm just concerned. And I also, Berachain people, wow, that is very surprising to see. I have not looked at this chart in many years. Did I ever tell you guys this is my first ever on-chain transaction, swapping ETH to Ohm?
No way. Legendary, just give us the context here. What are we looking at for the people listening in?
Looking at the Ohm chart, up 120% over the last year. Actually looking better than Jupiter and all the other things we just talked about on the show, up 13% over last month. However, obviously we're still, that doesn't really compare.
Jesus, look at that. That's like the Wi-Fi chart.
It'll
never recover.
Has the price gone beneath zero there? Looks like there's some trend line in the middle and it's gone beneath that. But
it
guys, just for people who are listening in or maybe unfamiliar, let's just explain, why is Ohm so risky and why, what are we suggesting here? What are the risks here that people should keep an eye on?
Well, that is hard to sum up quickly, but let's say Ohm is a chain that has been forked. There have been some very interesting things going on with the token distribution, with yields being farmed on there. And as you can clearly see, that chart is down more than. In the meantime, that migration from V1 to V2 has happened, but it was basically a big part of DeFi summer to farm all kinds of Ohm forks, and so many of them existed, and none of them really ended very, very well. And Adam's concern basically is that since this is the root of Bera to a certain extent, and we have very attractive yields going on, that it does not take the same turn and ends like most of the Ohm forks did.
I wish everyone well, and I wish you a great bullish time on Berachain. I have just been personally scarred, and I am going to have fun staying poor, I guess.
This is it makes me feel like the Lion King, like everything but the light touches. And he's like, just like, we don't do that over there. Like, it's fun, enjoy yourself. We don't do that.
I think it's a very reasonable point to make. Be aware when you're looking at yield, you need to answer the question, where's it coming from? At the very bare minimum, ask the question, try and figure it out, have some fun and games if you want, but just answer that question. Right, guys, that was a very fun show and nice to have a full house. Again, reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video, YouTube, Apple, and Spotify podcasts. Thank you to all of you for joining. As usual, thanks to Legendary, Brad, and Adam for co-hosting with me today. We will be back with you again tomorrow. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.